with what we just heard from Rosengren. He was just talking about how data dependence doesn't mean you gyrate with every report, but of course he's talking about the Fed. You're focused on the markets, and we will gyrate. What do you think the market should and will be doing after this?
Hi, Becky. Well, Santa visited the markets early this year for three reasons, and that's inflation, which is moderating, the Fed signaling a pause, and economic growth, which is cooling but not too cold. And today's job status supports that, but there is one wrinkle, and that's average hourly earnings at 0.4% is inflationary. And I think this is what's just going to set up a complicated backdrop for the markets in 2024. We're rolling into the year expecting 5 rate cuts by the market, the first one in March. And the pieces in place of inflation at or below target likely aren't going to be there by the time March rolls around. So some of this trade of the non-mega caps catching up to the rest of the market and S&P trying to cross 4,600, I think that gets difficult. And 2024 is volatile, likely to the downside at the early part of the year.
Is there anything that would change that perspective? I mean, we've also just heard that the economy may be weakening a little faster than the Fed might like. I guess the good news is that means rate cuts could come sooner. The bad news is that means the economy's in trouble.
I think there's two things to watch that could change the perspective either way, and that is the employment markets and the consumer. The consumer is what we're most worried about in 2024. We're seeing auto and credit card delinquencies increasing significantly, restaurant spending pulling back. I think it's the consumer that's really driven this economy due to the stimulus from the pandemic and the era of easy money. And if the consumer continues to pull back in 2024, I think that does pull the recession a little bit forward. But again, March is about almost 3-4 months away at this point. I don't think we're going to see it that soon, and the market's going to have to price some of those rate cuts out.
You know, some people say this next year might be a decent year because it's an election year. You can bet that the government will keep spending. I guess that's up in the air at this point, depending on what happens with the Republican-controlled House.
Well, history's on your side in an election year. About 75% of the time, markets are up about 7.5%, but it is back-end loaded. It tends to start in the summer, which again sets up for that more volatile first-half backdrop. The second issue going into this year, though, is market valuations, which are at a premium, given the 20-ish% run we've seen in the S&P for 2023. So you need to count on earnings for 2024, and it's going to be those companies that can preserve margins. The companies that we like are in sectors who can hold on to pricing power in a moderating inflation environment and manage through the economic volatility. We saw that with Broadcom today, which bucked the trend with stronger networking growth than people expected.
I think it's a little interesting what you're saying, though. You're concerned. We've heard so many people who are concerned about just the Magnificent Seven. You're a little concerned about the rest of the S&P 500 catching up. That raises brows for you?
Well, the reason the rest of the S&P 500 has been catching up in the past number of weeks is because yields have rolled over, because we're hoping for this aggressive 5 rate cuts. I think that's what's going to be priced out of the market somewhat in 2024. So that trade unwinds a bit. Next year, though, I don't think the Magnificent Seven is going to perform as well as it did versus the rest of the market like it did in 2023. But I'm not betting against U.S. tech. I mean, in an era of inflation continuing to moderate and rates at least at a pause and maybe some cuts later in the year, that's still positive for technology stocks.
Okay. Sarah, thank you. Have a great weekend.
You too. Thanks for having me.
All right, let's take a final check on the markets. We're, again, seeing after the numbers came in a little better than expected, but the unemployment rate dropped below expectations, 3.7% versus the 3.9% estimated. Futures have kind of shaken out in the red for the most part, but not major losses at this point. The 10-year, you did see higher yields, right? The 10-year was above 4.2%, 4.24. The 2 years at 4.7 almost. Andrew, safe travels. Make it home safely. And somebody do us a favor and twist one of these pictures for Joe. Go ahead. Lean it. One way or the other.
See you, Jonathan.
2 seconds.
See you, Jonathan. See you,
Chuck. Yeah. Have a great weekend, everybody. We'll see you on Monday. Right on time for the
Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Final jobs number of the year, 199,000 for November, slightly above estimates. Unemployment 3.7, that's a 4-month low. And the best participation rate since the pandemic. We'll get to it all. It's where our roadmap begins. That jobs report, of course, November numbers topping estimates. Futures try to climb higher following an initial drop.
Plus, Lululemon is the biggest laggard on the S&P this morning. That's following its tepid holiday outlook. We'll give you more details. And Honeywell agrees to buy Carrier Security business. The price tag is $5 billion. We're going to speak exclusively Honeywell CEO. That'll be later this hour.
Let's get some reaction to the jobs number. As we mentioned some of the metrics here, Jim, lowest annual wage growth in a while.
Right.
And as we said, participation is encouraging.
Major focus is exactly what you just said. And I want to say something that it's really bugging me. There's so many people who are getting a rate cut in.
Good morning, good morning. Crush it today, traders. Absolutely, Deck.
Just play it out. Start cutting. Good numbers. Let's be sure. Let's have 6 month numbers like this. And David, it's really almost that they look at something and make a decision. No one wants to say, you know what?
Let's take a look at Tesla.
Yes, they have to. They're chosen for trading.
Could continue down. Nvidia as well. Apple looking good for a up move.
Right after.
Let's see.
More or less almost all the way back.
David with a series of great calls.
So I did save somebody.
Well, I just think
Mine, and I got
look at see here. It's like, don't get off the phone. Well, I think that
Oh.
the bias toward action by them is very
Not it.
unrealistic for what if I'm JPOW. JPOW says, look, prices are great, so you get a pretty good 7% unemployment. Why? And should we wait till it's like because right now it's just big inflation and
Then people sort of slice and dice, take away SAG-AFTRA, take away government, and take away healthcare. And some of these non-cyclical areas, Jim, you're looking at 26K for the month.
manufacturing is a little bit strong. We're spending $1 trillion to be
Okay.
sure it could create 20,000 jobs.
Back
a
to
lot of
it,
people
back to
are
it.
confused by that healthcare because we just don't see it in the system company to company. But this is a very strong report, and I think that those who keep looking for revision that's down, we get revision that goes one way. But I think good is good. Is what I'm saying. I think that when you read some of these strategy notes they're starting to get, their biggest fear is a recession. They should wake up and stuff.
At or below.
They really should.
Meanwhile, we got gasoline futures 2-year low. Oil's on
Good
pace
morning,
for
good
7
morning,
weeks
good
down.
morning. So, starting the day, a little red. Took a loss on the short. We just kept pumping. I had taken a short at 45.73, expecting a continuation down, and this thing ended up pulling all the way back up. So I do think that this wick will end up getting filled. So it's just a matter of waiting for an entry. But right now I do have a sell limit at 45.84. So let's see how that plays out.
Yeah, but there aren't that many of them.
Right. What I'm saying is, so it's price is up 40%. There was a really great moment in the dollar.
Ooh, look at, oh my goodness, look at gold. Come on, this is it, baby. This is it.
Than it did 3 years ago. Well, that just makes the prices go up and stuff. Well, or they take out an Oreo. You know how we do that? When you buy some package, you say, wait a second. I think there's some Mike and Ike's missing.
Well, now you're getting to David's Malamars.
Thank you. Carl, you've been listening.
Yes. He knows if there's one fewer Malamar.
They cut back from 10 on the side to 9. That was years ago. And then they made them smaller. But I think Mondelez has stopped the shrinkage. For a
You
little
do?
while.
I think Mondelez.
They took tapes
We should
that
speak
were
to
like
Dirk.
this. The tapes are now like this.
I think so. I'm worried about shrinkage there. Not stealing. But the Toblerone, I bought it in Italy. I think it was I don't think it was a yard and a half. I think it was like a yard and 5 inches. But it was in metrics. And they fooled me because of that metric system.
It's better for all of us. It's better for all of us. We wanted to go on GLP-1s. We'll just eat fewer cookies.
The Toblerone, that's a weapon. It is. It's a weapon. I mean, that thing is just too much. By the way, the shrinkage in Dollar General. Right. 100 basis points.
All of which is to say what in terms of the economy? things, I mean, the lower end is getting hit a bit.
Yes,
We know that.
a bit.
But joblessness remains.
Well, as long as you have a
or
job, you're going to
job,
spend.
yeah.
I
Remains low.
I heard someone talk about what the
I
credit
get
card
your
debt is
feeling.
bad, car debt is bad. If you have a job, you're going to pay for that car because you got to get your job.
Also, when you look at delinquencies, the fact is that they're really not even back to,
To 20.
they're right. They look worse given the surpluses everybody had a year ago or 2 years ago as a
Right.
result of the government's money, but they're still historically not bad at all.
Wait, no, we have to ask for that crazy period where you were getting checks. It was like, hey, there's another check I got for the president.
Well, that was to prevent economic scarring, which every month we get an indication worked.
I agree.
Speaking of the low end and the high end, Lulu today falling in the pre-market. Current quarter guidance comes in shy.
A lot of stocks
consensus,
dropping
despite
pre-market.
revenue beat and some pretty positive
Could
comments
be a very
about the
good
start of the holiday.
sign.
Meantime, the Journal's got this article highlighting how luxury retailers are trying to unload excess inventory at the high end as shoppers pull back. They cite one online
Sell
merchant.
limit at 84. Will I get it? Good morning. Good morning.
Luxury is the area that's not doing well. We got that with Andy Jassy when I spoke to him at length. So I do think that we've got this, that the Lulu is a misinterpretation. Those are Chinese. Those all trade China. And they're obviously European companies. Well,
Yeah, that's
Come
also
on.
luxury.
Give
Yeah,
me
a lot of that is
84.
related to demand.
One more time. One more time.
because Calvin McDonald's a fabulous CEO, and the numbers are all great. So the big conundrum is, how could he be so worried about the quarter if it started? Does he know something we don't know? And it got a little defensive at the end. For a guy who's one of the great merchants of our time.
Although we got a pretty healthy movement in price targets. Increases at Morgan Stanley, Oppenheimer, Key, and some others.
People recognize that that's just him being
Stock was
concerned.
looking a lot worse right after they reported the number.
Well, because the headline, they do the GP, whatever, it's the chat GPT. It basically says immediately, hey, listen, this is really bad. And then you listen to the conference call, and the analysts seem to be more influenced by
Happy
headlines.
Friday, y'all.
So
Happy Friday.
Everyone was just saying over and over again on that call, what do you know? Tell us what you know. And finally, just listen.
All right,
I
first,
gotta be prudent. What's the matter with prudence? And I think he's being prudent, but I think he's gonna make good numbers.
I think we have some sound racked if you want to hear
Oh,
a bit
good, yeah,
of
this-
what we heard last night. Take a listen.
We're pleased with the trends we've seen.
Here
as
we
start of the
go.
holiday
Here we
season.
go. Almost
That
there.
being said,
Fill
the
me.
majority of the quarter remains in front of us.
Come on.
We remain aware
Give me
of
that.
the uncertainty in the
84.
macro environment, and we continue to plan the business for multiple scenarios.
Come on, bro.
Is that not what you should do? I mean, when I was listening to it, I said, oh, okay. Yeah, there are a lot of scenarios out there. Got a plan for it. Right, Dave?
Yep. Jim, I want to come back on a couple of things in the market the last few days in terms of, well, AI related and just in general sort of
Come on,
seems to
bro.
be kind of this retail trade again.
Okay.
A lot of stocks that are heavily shorted moving up, like Coin or Affirm, Bitcoin obviously itself.
Right.
I don't know if Robinhood is doing any better.
Yes, it is.
suddenly.
It went from 8 to 11.
No, but I mean, I get maybe it's
Oh, with the
businesses.
company's doing better?
Yeah. No. Yeah. Well, maybe more people are using it.
A firm is doing better. They
Yes.
didn't screw up. Max Levchin did not
But-
have bad buy now.
And then this move in AMD and Google yesterday, a day after news, the Gemini
Don't
thing
be
came
whining
out
shit.
at 10
Come
o'clock
on. They're
Wednesday
really not going to
AM
give it to
Eastern.
me. I don't want to
Stock rose
chase, but
6% Google
I
yesterday.
might have to try one at. Nah, I'm going to wait. I'm going to get that. I'm going to get that.
And AMD did not have great things to say,
Patient,
then the stock
patient,
ran
patient.
5%.
I think that people are excited about how she took the 400 billion from 200 billion since when she had in August for generative AI. But look, this yesterday, David, seemed like a realization that maybe Alphabet's got something going, a realization that there's enough room for AMD's chips. But it was kind of odd because the move should have at one point tapered off.
I know.
It just
It
kept
did
going.
react to tape prior when the actual product was unveiled. So to
I'm
speak.
moving 1
Didn't
to
react nearly as much as it
83.
did.
Come
You know,
on.
it doesn't have the
And
support layer.
there are all questions about how do you monetize Gemini, and then and there's the whole question about search and how that's going to change. And I think
Entering
if you give
current
up
short
share in
on
search,
Forex
Google, while
because the shit
generally
might
being
not give me my entry.
that can compete.
When I was in Seattle, the thing that people keep saying is, "This is not search. This is not search." You get people like are putting in, you know, they're asking GPT, "Tell me about 5 good Mexican restaurants in the area." It's like, no, draw a picture of class pants, and it does a picture of glass pants.
Glass pants.
That's from I Spy. Remember the show with Bill Cosby and Robert Kolb, I Spy?
Wow, I spy.
Yeah.
Say, yes.
Glass pants.
You're taking us back to the 60s.
Yeah, well, I'm just saying that
Making sure.
it doesn't, you know, I think you're doing rock, paper, scissors. I don't necessarily think that that's the fundament of generative AI. What, boy, is it fun? And how funny is the guy? He was like the guy used to do. I went to work at the Goldman Sachs.
We're going to get to a lot more of what Jassy told Jim about AI, the dangers of AI, the Hyundai partnership, and a lot more after the break. We got some news on today: Tesla, Spotify, Apple, Microsoft, Qualcomm, Micron, and Broadcom, of course. Futures still strong.
Yeah. I mean, I like both. I like both of them, NAS and ES. But ES, it doesn't move as crazy fast as NASDAQ, so I prefer to alert you guys on these on ES trades because it's much more manageable. Ah, there she goes. Ah, these haters. Oh my goodness. Y'all seeing gold right now? Look at gold. Dunzo. Oh, she's going for that gap fill. Gold has a gap to fill at 215. 10 points away from that. Wow, look at this. Consolidation, broke. Ugh. Okay, come on.
I happen to think that generative AI is going to change every customer experience, and it's going to make it much more accessible for everyday developers, even business users to use. So I think there's going to be a lot of societal good, but you have to pay attention to some of the dangers of generative AI, and you have to have the right security. You got to make sure that that the models are not overly hallucinating, and so you do have to care about safety and that. And in the businesses we operate in, whether you're talking about consumers in our consumer businesses or enterprises in our AWS business, they're going to care about the safety pieces. So we have a lot of focus there, but I also don't think that you should throw the baby out with the bathwater. Like, I actually think this is going to be hugely helpful in every customer experience.
Andy Jassy with Jim, you got so much stuff you had to break it into multiple days.
Yeah, we did. We spent a lot of time together. He's a very, very, very thoughtful man. That was in relation to.
Here she comes. She's not gonna give it.
About safety.
At least I'm in on the Forex side. I'm still waiting.
it's like it's
So on one account, I do have a sell limit at 83, hoping can get a pop to 83. And here on TOS, I'm looking for 84.
I thought that was really
Bro.
a refreshing view.
Yeah.
Middle of the road.
Yeah.
Don't panic, but be real serious about what could go wrong.
Right. The question is what safeguards will be available and or put in place as things move at a rapid pace.
Well, I think that's the big issue.
And they are, going to fuel rises for the companies.
What I have, that's the mini.
It's obviously a great
Minis, my good sir.
talk about it.
Minis.
And you're taking a look at number one there, NVIDIA, in terms of beneficiary of.
Yeah, and they have a good relationship.
And then what
People
it means
think
for
they don't.
productivity
There's
in
a
the
lot of
workplace over time as these apps and these opportunities become available to the enterprise. To
We do
companies.
minis out here, bruh.
You move at breakneck speed.
And
you're
micros.
gonna break things.
Right, but I think that what people have to recognize, and he used a bunch of examples, but I happen to like the Lee Child Jack Reacher series. It's just a good storybook. And he knows that I know that I've ordered it. He's got the movie. So he's got everything about me. And he has predictive information that says that I will buy the book. And I did, and it had it a couple hours later. He knew. I didn't know
I'm going
that
short
it was
on the
out.
dial.
He knew there was a new book and I'd buy it. And he knows this for about 100
I'll be looking for a wick fill. Both? Wow, yo. Oh my god.
Well, I didn't have to go to a bookstore.
Yo, gold is
If
just
you want to know, I
done.
like the new fellows run Wolverines, but look, we're a
Jeez
big winner of
Louise.
shrinkage and a big winner of plexiglass. Get the key, ring the button, because they know
Gold is GC right here.
anyway. So
Um,
why go to
/GC or just GC if you're on if you're trading on Tradeovate. Yeah, this thing is just done. And if we go to a 4-hour time frame, you'll see I have a level marked off. So right here at 2015 is the gap fill. Wow. And go back to a 1-hour time frame. Look at this consolidation that we had, right? Massive consolidation, and then we finally broke it at 2042, and it's already down almost 20 points from that level. Just wicked.
Mark doesn't talk about it.
Today should be a nice sell day.
Interaction, if you want to try to figure out how to use it best for sales. By the way, out there, when you talk offline about does everybody know what they're doing? Some people wish that people would rent the cloud, which is the snowflake model, so they could understand it before they just spend
Nice. Post a chart if you can. Don't be shy, guys. Feel free to post charts and analysis and trade ideas as well, man. Don't let it be just me, alerting you guys to things. Feel free to, share whatever trade idea or what you're looking at, charts. Damn, might have to take this in queue. Wow. GU was solid.
That's going to showcase the advantage of our unique world-leading 5G network here. So now we're moving from picks and shovels to platforms.
Yes, and what I gotta tell you, you speak to people while they're getting mic'd up and stuff. One thing is for certain.
NQ looking juicy, but I can't hold that though.
Share take
Okay.
because the whole country.
Nah, facts, because this thing could easily pop right back up. So you don't want that.
And the services we have, I got the sense that the era of the price cut is over. By the way, the Apple, the 15, it's still the best way to open an account and take people's business.
So looking for shorts this morning.
15 is Mike Siebert is the man who's selling you the 15.
I don't know. From everything, all I've heard, I would think from an investment standpoint, just own as many data centers as you
All
can.
right, all right.
Involve yourself in data
Other than your article, which reports on
Or
why
maybe you're Vertical. Or maybe you're, did you see the digital realty deal today with Blackstone? Their $7 billion deal, digital realty. They're going to build four giant data centers. They're going to produce 500 megawatts or consume 500 megawatts of power. That's 86,000 homes. 4 data centers.
Good morning, good sir.
if you
picks and shovels.
Right, right. And Vertiv, I think we had them on. It's an amazing company. It Dave Cody. We have Honeywell on today. Dave Cody, former CEO, is the chairman of that. It's very active. I have to tell you, I was blown away. I was blown away how good this thing is. I came in ready to just shred it, okay? And I came back. You know this O's the mentalist? He has nothing on chassis. Chassis didn't
Good look at where AMD's at. Wow, 130.
O's is pretty impressive, I will say. I was here the other night.
Let's see if we get a pullback to 125.
We'll get more on that. We got some news on Microsoft and Apple tied to both of those storylines. We'll get Kramer's Mad Dash and countdown to the opening bell. One more look at futures on this Friday. Don't go anywhere.
Wow. Yo. Okay. Yo. GU, come on, B. I know I'm feeling like I might need to just get in ES here and then just leave my ad.
Order filled.
Just entered the micro on ES at 80 45 80 25. I still have my 80 83 on the mini and 84 on the mini here as well on TOS. So let's see if we can get that, and then a nice drop. And as you guys can see, I'm starting the day slightly in the red.
6 minutes or so from now. Let's talk a little Broadcom. As I like to point out, one of the larger companies out there, $30+ billion market value, having recently completed the acquisition of VMware and reported earnings after the bell. Jim, what's the take that we're hearing?
All right, well, look, the profits were great. The revenue's not as great. I'm saying not.
Okay, 5 minutes to go. Come on, damn. Damn, they don't want to give it to me.
Chassis said it's still 90% on premises. This is a way to get on cloud. One of the things that Hawk talked about is the deal took so long to close. They built a lot of cash, and they're going to go and buy back their stock aggressively. Now, you know, Hawk, aggressive means real, like done. I think that one of the things I was most excited about, everybody raised the price target, is that I think that he, at times he raises
Yo, what a drop on GU, man. What a drop.
It's time for run for the roses.
They have 14.189 billion in cash. That compared to about 12 billion at the end of the prior quarter.
They have $7 billion to buy.
Adjusted EBITDA margins of 65%.
Going short on EU. Oh, look at GU. Wow. Okay, okay. Good chase on my part. Yeah, I would love a pop too. Like that's why I'm keeping my my limit order at 84. I would love a pop to there. But if not, I mean, I may have to chase it a bit. Yo, NQ's already dumping.
forward.
Yes.
And we expect that to accelerate growth, they say.
But
Early
also-
stages of what they call a multi-hundred billion AI data center opportunity.
It's for real. Pop got it.
Back
And-
to the picks and shovels.
Yeah, so
the data
because of what you
There
just
she
said,
goes. Look at it.
because of what you just said, I think the 7 billion, I wouldn't be surprised if you bought it all
in terms of the bottom
because
line.
he thinks the stock's so cheap.
The needle that much on a 430 billion
Wow.
market.
Okay.
Yes, because all the analysts love it. So there's just
She said,
it's an
"I'm
inexpensive
gone
stock.
like
It is
the
AI.
wind." Woo.
Something.
We'll be keeping an eye on shares of Broadcom, and we got a lot of other stocks to watch. The reopening bell also just 4 minutes away. Don't go anywhere.
Go. Come on, just a little bit more. Just a little bit more, baby. Haters. Come on, come on. Adding to the Dow short. Come on, give me 84, bro. Give me 84. Less than a minute. Get those trigger fingers ready. Come on. Come on. Oh, don't give it to us. Yeah, come on.
Carrier says the proceeds will go toward paying down debt. CEO's going to join us in a few moments. This
Come
is
on.
things like,
There we go. Pop, pop, pop,
oxygen
pop,
for
pop, pop.
hospitals and
84. Come on, give me 84. 83 first and then 84. No.
This is a deal that helps them both. I know Honeywell, frankly, it's a little beyond me to think why it's down 3. This is
Okay.
accretive. It makes a lot of sense.
Okay, so I'm not getting it.
Order filled.
Okay. Short at 85, 45, 82, 25. Whoa. I guess it did come to my level. Ah.
So, one more notch in the December data. Does that set us up for what was classically the
Guess I
standard
shouldn't have been a little too overzealous.
If you can take recession off the table, I mean, we get these notes. You get the people are starting to do their year-end right? What I'm seeing is there are people who say, listen, there's still going to be a sense that the slowdown will still go. And I read the numbers today and I say, no, that's your own paranoia. There's no panic coming. And I like what? Hey, look at me. What? Am I supposed to be as negative as these analysts? Look at this. I like this is like the analysts who are negative. Yeah, this is the analysts who are positive.
Okay,
Guys,
okay.
their lives must be miserable.
Nice fake out.
I don't know. Maybe they had like one of those quarterbacks.
Let's go down. Yes.
It's quite marvel at the amount of paper that you waste every day. I mean, are you really going to read D.A. Davidson's sector brief on food products?
I was all over that. They're like Mondelez.
Don't quiz him on this stuff.
This is the key chart.
Okay, let's put the short back at 84.
Food gross margins have contracted 300 basis points since 2009. Yeah, well, with each cycle's peak and trough.
Come on, give me 84. Give me 84, baby.
That's why the multiple's shrinking constantly. Yeah. David, the only way its multiple's going up is Clorox because they figured out where all the Clorox was after the hack.
Glad you got this.
Eventually, eventually AI will give you all the.
Yeah, actually, why don't you have one page on every single thing that actually goes through all of your research in the morning?
No, because that's what a lot of. By the way, CFO CEOs I talk to,
Come on.
what do you do? How are you using it? Well, analysts will write reports about my company. And it's just
Come on.
period.
All right, we're back in. Back in at
I can
84.
make myself look so much better.
Let's see if we can get another dump down to 45.80. Just some quick scalps to get back into break even on the day.
It's a strip club bouncer. That's what I was going for.
Lulu's the biggest S&P loser of the Open Gym. We didn't mention RH.
There's a major lag on TOS in comparison to Tradeovate.
He was quite defensive and was making the point. He's bought back a huge number of shares and higher, making the point that this is the worst housing market ever. And then he walked it back to watch 2008, 2009.
No, it is the
Really
worst.
looking good.
It's just, right. There's nobody. I mean, yeah, Toll's doing fine. We know that. But what
HE
are the
right
numbers?
out the
3
gate.
What is it? 3.2 million something tiny overall.
Their sales,
Never had a lower number.
the fulcrum of their sales are new homes for rich people.
Oh, is that true?
Yeah. And frankly,
That right. Oh, all right. So they're
Yeah.
basically furnishing all those.
right,
houses. Yeah.
right. And the highest end, and they're talking about Munich. There's great stuff about Munich.
But if you're
When Munich
connected,
opened,
if you're
you get an
connected
investor,
into
you're an
home
investor.
sales, it's not going well for you right now.
No, and that's why he just saying, listen, a frozen housing market is the worst for him.
Although
And it is frozen.
we got mortgage rates here down for the 6th straight week, 703.
Doug,
UK sub 6, or actually sub 7 with a 6 in.
Doug Yearley's saying, look, it's just going to make it so that there are even more homes that they can do. They're actually going to build a few more than they have spoken for. They were just building ones that were spoken for. But look, it's a bad
This
market.
is wild. Like, this lag is ridiculous.
I'm sorry, where your mortgage that you have and where the mortgage rate you have to get is still so wide, given that rapid increase in rates.
Right, and what's the big sticking point is how many people actually did refinance, and they don't want to give up that 3.5.
Are they going to really wait to get back to that exact level?
Gary thinks that they're going. Gary's kind of negative short term. I felt for the guy. because
Okay,
I
and
think
now
he
at
was-
85.
You see, 2008 was bad
Can
for
I
housing.
get-
didn't realize he's speaking about transaction.
Let's see if I can get another pullback to 83.
Or Albert Williams Sonoma down.
That showroom they have in meatpacking,
How great is it?
that's amazing.
Don't you think?
You
Yeah,
can't
you buy the
find
guest
more
house there.
couches.
Apparently, this hour-and-a-half pilgrimage to the London
Come on.
I don't know.
mansion
Come on.
that they
Go
have.
back. There we go.
Paris, you can overlook with caviar. They have just Petrojan overlooking the Eiffel Tower.
That's nice. Not,
Munich.
it's fine. I like the RH guest house. Very nice.
And you know which one they got highlighted? After Munich, after Paris, after London? Indianapolis.
Really?
Yeah. They mentioned Indianapolis.
There you go. All right. So I've cut down my 200 plus loss on TOS down to 62.
He's been there.
We'll make it a new
Oh, What are you short on? ES, guys. I'm scalping short ES until it gets ready to fully unwind and come and give us this wick fill. So I started the day negative $275, and I've been able to scalp, as you guys are seeing and hearing, ES to be able to downsize my loss from 272 down to 6250 minus commissions, whatever. But I'll definitely be able to get in the green on this account. Just waiting for some more confirmation. But I am still short on my trade ovate at 45.83. This one I'm looking for a slide down to 45.70, maybe 45.73. I'll take 10 points on this. And I'm also short on the forex side as well.
And they can predict the blitz for everybody. And who's going to blitz? And I made the joke that maybe the coaches should have your program on the sidelines. And he was like,
First,
didn't say that, but the
PT,
idea is that
45.70.
the Eagles are going to blitz Dallas, so that well, you know, from generative AI.
Well, 45.73, ideally.
But same thing, Michael Parsons, I'll know exactly where he's going to blitz because, well, you know, it's actually an argument.
Speaking of streaming, Paramount's leading the S&P on some of these Redbird headlines.
Carl, I got the story, the deadline story earlier. Obviously, I've spent way too much time through the years talking to people about Paramount, future, and the challenges that company faces. The story is basically along the lines of, hey, is there somebody out there such as Redbird that would be interested in trying to acquire not the company but the control position via National Amusements? It's not a novel idea. It's been around for a long time as a possibility. I don't know anything. Redbird's got plenty on their plate, including obviously, as I think I've reported, being interested at least in participating.
Tempted. Should I do the? I'm gonna wait to re-enter on TOS again because there's a serious lag. What's up? What's up?
Has gotten smaller, so Redbird's certainly still there for that. I don't, a number of significant executives have sort of made their home at Redbird or will make their home at Redbird in the industry, but I'd take a dash of salt. Thank you. Thank you. I'm trying to think of what spice should be used here. But
Shorts. I'm currently short ES 45.83, and I'm looking to add again. So I've done some scalps on the TOS. So on TOS, I started the day negative minus $272. I've been able to do some quick scalps since the open to just downsize that loss. So you can see right now on this account, I'm negative $62.50. And he has a gap because of the contract change. Yes, but the contract doesn't fully expire until next week. So if we look at come on. Okay. So yeah, so we have 7 days until this expires. And yeah, you can see like this is going to be a massive gap up, right? And if we look at NQ, same thing. So current price, we're looking at 46.30.
I should have asked to follow up. We were at the very end of our interview.
Yeah, so we're looking at a 50-point difference from ES, from the current contracts to the next one that's going to roll over. And then if we look at NQ, okay, look at this push. Yeah, on NQ, I mean, we're talking 200-point difference. Ooh, oh, she might be like, I'm out of here, bro. Ooh. That's not nice. Why you gonna go and do that?
it's like they take their time too. That's another thing that you have to see.
Yeah, that's Albertson program. There was some talk it's going to be this week or next week. No, that's not the case.
I worry about Microsoft has been unscathed ever since they learned their lesson.
Okay, 87.
And people think that they have processes.
Back in short, 87.50.
If there's really something there.
What are we back to? I'm sorry, what deal are we back to?
But the CMA deal, when Microsoft, they're looking into it.
Are you trading the new? Nah, I'm still trading the old ones. I'm not trading the new contracts yet. I'll switch to those on Sunday.
Investigating Microsoft and OpenAI.
Because it's so prurient, it's so exciting.
People sitting at home in their underwear. Do you really think that they know? I don't want to think about that. Oh, sorry.
All right. I've been able to wipe out my loss. All right. Now let's get down to business. Wow, what a pump. Goodness. Woo. Oh, okay. I'm gonna give it a few. Gonna wait.
I know it's cliche to say win-win. Dave Gitlin over at Carrier, he needed the money to keep his ratings solid as he finishes his acquisition of a pump company.
Wow, and you want to see something crazy on NQ? Let's take a look at NQ and look at where it bounced. Slightly above.
Is this one where you're going to just take over that hotel vertical? There's very few that don't use it. Or the idea that maybe
Shit, it might be going for those highs.
and all the data center companies that need security, and that's got to be a great growth business.
No, absolutely, Jim. Automation is
So I will wait.
Focus anyone on 3 mega trends: automation, aviation, and energy transition. And this one is right in the wheelhouse of that strategy.
Oh,
We
Nikai's
have a
catching a
good business in
bid.
building automation space.
But it's Friday, don't want to touch it since they have their CPI. Russell, nice pop.
The trends we see, and Jim, you pointed out right.
Look
very
at
well.
gold so close to filling that gap. Nice bounce. Oil was a good long. Ooh, look at that. Market said I'm out.
Pharmaceutical production, semiconductor fab. So we see growth here at a higher trend rate. Therefore, we are excited about this business and how it becomes accretive to Honeywell, both for growth and for the margins.
There's Leno S2 partners with Apple to provide companies with employee badges in Apple Wallet.
Wow, Tesla pump.
Which I think
Nvidia pump. Oh, this market's going higher. Market's going higher.
Absolutely. There is going to be more and more
Close that.
convergence of physical security and cybersecurity. And increasingly, customers are asking us more and more around how to converge this two words. What I like about this business
Yeah,
is
market's going higher. Market's going higher.
business will look
Bro,
like,
right back to the morning highs.
but this business has
93.
job to build a very strong software franchise, which fits very well on how the cybersecurity integration will
Yes.
happen here. So
Tesla.
a lot of good momentum on the core, but some of the new macros are going to help the business a lot.
That's funny.
People don't realize this company is a big company, and you have about almost 50% of the Fortune 100 use you already.
Let me see. So we're trying.
I didn't hear the question, Jim.
Almost 50% of the Fortune 100 use this company that you're buying.
Oh yeah, we got economic
Absolutely.
data coming out.
Into the big companies is pretty strong, and I expect that to grow. The value Honeywell is going to bring in. We do a good job.
Maybe this could have been a pump for that.
You talked about data center.
Okay.
We are only going to increase penetration from top 50 to many other larger organizations in US, in Europe, and rest of the world.
Dave Cody once told me when he was running Honeywell that you'll never see a rollback in safety and security. No one says, we have too much safety, and therefore you want to put your chips in this. This seems to be
Yep,
an
consumer
asset. It's
index.
right into Dave's idea that you're just going to have more security and more safety around the world. And your new company
safety and security, I absolutely believe in that. How the world is shaping up, the parameters required, safety and security are only going to increase. We have a very good business in our
Okay.
this asset just puts a multiplier effect, give us an opportunity to build the business which is higher growth, margin expansion, better cash generation, which really excites me on this deal.
But I think people may think, in judging from the stock, that maybe somehow you're done. But you got 25 billion in firepower. By no means are you done reinventing Honeywell.
Yeah, I mean, we are actively looking at M&A opportunities, this being one of them. Earlier this year, we acquired about $700 million deal for compressor control, another automation addition into our portfolio. Yeah, we will constantly look at improving the portfolio.
So I'm gonna
quality
wait
through M&A. That's our
until
strategy.
10
Bolt
o'clock
on
until the
M&A is
news
our
comes out
strategy.
to see if
Every time
whether
we bring in
I'll
an asset, we look at it,
re-enter
how it
short.
grows
We
with
got a
our
nice
business, but also
wall
adds
over
revenue.
here between
So the
91
firepower
and
question,
93.
absolutely, we
So let's see if
keep
this
looking.
holds.
And if the deal makes sense for the strategy, and if it has the right returns for Honeywell, as this deal has it, we'll continue to stay active in the market.
I spent a lot of time reading stuff by Steve Tusa because he's been critical about some companies and not others. I know he thinks you're doing a terrific job, but I would be wrong not to bring up the long cycle business. It just seems like aerospace, people like Boeing, but your aerospace business, is it fair to say that it's the strongest it's ever been?
That was looking real strong right
Oh yeah,
now.
the aero cycle is probably strongest absolutely for a long time. The commercial aerospace business is doing very well. The defense and space part of the business portfolio is also performing extremely well. Two unfortunate wars generate demand, but we also see trend line on many NATO countries and other allies of US spending more money. So our business is not growing only in the core commercial, but also in defense and space and business jets. So I see growth momentum in aero for a few years ahead. Probably it's one of the best time for the aero industry.
Switching back to the acquisition, there's a part of it, Onity, which offers electronic locks, including hospitality access, mobile credentials. 9 out of the top 10 hotel chains are using this. I mean, is this just is it a subscription business? I mean, it seems like it must be consistent revenue.
Yeah, the hospitality is a big part of our segment today. We do environmental controls in hotels. If you go to a hotel,
In long
and,
NQ.
fancy thermostat on the
Okay.
wall, it saves a lot
We
of
do
energy.
have news
So
at 10.
this
So in
acquisition
11
brings
minutes we
more
have news.
mobility in the
So
space in form of
I
electronic
rather
believe
I'm gonna
electronic
wait,
locks
but
are going to have
best
more
of luck on it. I mean,
expansion
it
in
is looking
other
strong
applications.
with the
So
way
not only we
Tesla
could
is
get
looking,
stronger in process
and
control, which we
Nvidia
talked earlier,
as well.
but electronic locks. So
But
there's a
it's
lot of
doing a
goodness in
bit
this
of a
deal,
pull.
that's why we really like about that.
Yeah,
Well, I want to thank you for coming on, Vimal. I think that this is the
looks good.
beginning of what I've been waiting for.
ES
I
still
know that I wanted to
going.
show you that there's a lot of things happening. That's Vimal Kapoor. He is the
Oh,
CEO
Meta.
of Honeywell. Thank you.
Thank you very much.
These are both sad. I like both sad. I don't want a long ball here. I don't want to come in and say, like, you see Yellowstone, and say, that's a good one, I saw it on there. No.
This is a screen pass for 10 yards.
Yes, it's a screen pass for 10. You know, it's kind of something that better happen on Sunday night by the Eagles with Dallas Goddard.
Are we getting it back?
I'm going to the game because I'm the loudest person in the stadium. I'm good for about 20 Dallas fans.
Just watch the voice.
Oh man, yeah, don't come back here with no voice.
Why?
What do you mean, why?
You can't. You don't leave it in the locker room. You got to do it right there.
As we go to break, let's take a look at bonds today. A little bit elevated, 10-year 4.2, 2-year 4.7. People watching that unemployment rate at a 4-month low. Average hourly earnings, 3-month annualized, 3.1. That's not bad. And we'll get you mission in about 10 minutes.
Staying alive. Staying alive. Let's go. Still going, still going. Hmm. 9 minutes, 9 minutes. Yo, whatchamacallit, Thinkorswim, yo, they're really, really lagging. Like the price difference that I'm seeing on Thinkorswim and Tradeovate is literally a point and a half. So, wow. Yeah, yo, be careful with that NQ long, man. 9 minutes left until the data's released. Yeah, and still forming lower highs, so we'll see. I mean, I'm looking at NQ on a 30-minute time frame, and it's still holding below 16,038. Whoa, the Dow just, Jesus. Yo, this markets, man, these markets, I don't know what to tell you. Just disrespectful. You got all three indexes on other screen. Yes. Every day, it's always my setup. Like I always look at all three instruments simultaneously. So wherever I'm looking, like right now here, you can see I'm looking at ES, but to the left of me on another screen, I have NQ, and then I have the Dow. I have NQ and the Dow to the left of me. Ooh, look at this pullback. Ugh. Let's go. Oh, look at that pullback. Look at that pullback. Ooh, goodness gracious. Talk to me nice, baby girl. Yo, I think she gonna go for that wick fill, man. I still like this for this wick fill to the downside. But I just want to wait till after the news comes out. Oh, you see? Ryan, please, I hope you had a stop loss on that NQ. Oh, Lord. Oh, Lord. Oh, Lord. Ooh, still going, still going, still going. Aye. Oh, we going down. Please don't. Sorry to be going against you, bro, but please dump. Come on. I want to see this candle close below 45.84. Definitely probably shoulda coulda woulda entered at the 82 92, but I'll wait until after the news. I want news to hit first, and then I want to bust a move on this. Oh, beautiful. Beautiful. Like beautiful. I just want you to know you're my favorite girl. 5 minutes to go. 5 minutes to go. And 1 micro long side. Alright, best of luck. Best of luck. Nice little rejection on the Dow at a institutional level. Almost down 50 points from it. Ooh. Ooh. Let's go. Let's go. Let's go. Come on. 4 minutes to go. 4 minutes to go. Act right, baby. Act right. Act like you know. Like, act like you got some common sense for daddy. Ooh. Me waiting on my...
Stop trading.
I really thought that was a great story. Just all sorts of good things with drugs pipeline. But we're back in Talcal. This morning there's a story on Bloomberg about an ex-J&J lawyer of someone who did some defense work. Post $19 billion.
Come on, there we go. There we go. Give it to me. Give it to me. Well, add once news comes out. Oh, you playing dangerous. You are being dangerous, bruh. Yo, and sometimes, yo, like if the volatility, if you have a stop loss, listen, be mindful that sometimes when you set stop losses during economic data releases, if it moves really quick, you might not get stopped out where you want to. Oh, let's see. 2 minutes to go. Oof. Oof. Come on.
By the way, personally, congratulations, Nashville. People talking about, hey,
come on,
you
baby.
guys are doing stuff about what's really happening. And that's so sensational.
A lot of good work and great stuff on Jesse Amazon. We'll see you. Mad Money, 6 p.m. tonight.
Great job, guys.
And we also like David.
I like this check. I like this check.
Thanks for coming back, at least. So I'm not alone here anymore.
Goldman's Jan Hatzi is on the jobs number after a break.
Oh, that was already reversed completely. Okay. 1 minute to go. What we gonna do? Are we gonna pump? Are we gonna drop? Oh, wait. Did it just? No, that was a 5 minute. I think it had just pumped to 91. Okay, 30 seconds left. I'm seeing a wick on a 5 minute all the way up to 45.91 area. And then just right back down. What y'all want to do? Spike. Oh, good freaking wow. Whoa, okay, good shit. Wow. Good freaking long. Good freaking long, guys. Oh, it created a gap. Hold on. We gonna double that. Wow. It created a gap, guys, on this pop that I'm seeing on the Forex side and on Tradeovate. So we will see a pullback. Good shit. Where they at? Why isn't CNBC? Come on, bruh. Y'all can't be doing this to me.
morning. Welcome to another hour of Squawk on the Street. I'm Sarah Eisen with David Faber, live for you as always from Post 9 of the New York Stock Exchange. Carl's on the move this hour. He's headed over to Goldman Sachs for our big interview next hour with the firm's co-head of global banking and markets. We're going to check in with him in just a few. But first off, take a look at stocks right now. We're up, we're down, we're up, we're down, we're up now. About 90 points on the Dow and heading north. The S&P 500 up 0.2. We're going to talk about the jobs report and the sort of reaction that we're getting. Treasuries also, just to give you a flavor of the initial take, they sold off in reaction to jobs and continue to do so with yields a little bit firmer. We go from 4.1 on the 10-year to 4.22.
Nice,
And that's
nice.
where we are right
Yep,
now.
see,
30
look at
minutes
that.
into
It's
the
coming
trading
for that
session.
gap
Here's the
fill.
movers we're watching. Carrier Global, a top gainer on the
Coming
S&P,
for that
and
gap
Honeywell's a
fill.
laggard after news that Carrier is selling its security business
Got stopped
to
out.
Honeywell for
Damn.
about $5
Sorry to
billion.
hear that, bro.
Shares of RH are under pressure. The high-end furniture retailer blaming high mortgage rates and a frozen housing market for its surprise third quarter loss. And then we're watching Lululemon as well. The company's outlook for the holiday quarter coming in at the low end of analysts' earnings estimates. The revenue guidance was higher. We're going to break down those numbers for you in just a bit as well.
But first, we'll get to consumer sentiment since that was out just moments ago. Rick Santelli has those numbers for us. Rick?
David, there are some significant surprises here on University of Michigan. Now, granted, these are December preliminary, so in a couple weeks they'll change, but every metric here is kind of wild. Okay, let's first take the headline number, the sentiment number, it's 69.4.
I'm going short 97. If I can get this fill.
Jumped to the best level since July. If you look at
Should be. Okay.
Conditions,
Got filled.
68.3. Zoom, zoom, zoom. The 74.0, the best.
Looking to top tick this.
The future expectations. 56.8 was our November final. 66.4. That's the best since July. It doesn't end there. If you look at 1 year inflation, well, 3.1. This is the volatility in 1 year inflation by these respondents. It's off the charts. It was 4.5%. Our last look, that was the highest since April of this year. It drops down to 3.1, which is the smallest, to find a smaller when you have to go to Jan of 2021 to equal 3.1. You go to March of 2021. And finally, 5 to 10 years, same scenario. After basically being at 3 to 3.1 forever, it jumped up to 3.2 last time. To find a higher number than 3.2, you had to go all the way back to July and August of 2008. Now it jumps back down to 2.8, and 2.8 is the lightest since September of last year when it was 2.7. So everything about this number is beyond expectations. And if you look at interest rates, they've hardly budged. So I think they're looking at the volatility as maybe we should pay as close attention because rates are still up.
Yeah,
As a matter
still
of fact,
pushing.
the 10-year right now hovering around 422 is up 7 on the day, but only up 2 on the week. Whereas a 2-year note yield at current pace is up 15 basis points on the week. Sarah, back to you.
But just to recap, Rick, it's kind of
Need
mixed,
to
right?
break.
Consumer sentiment falling.
Yeah, for it to go
inflation
higher,
expectations.
possibly.
Maybe that's right in the sweet spot for the Fed.
Exactly. Right. Exactly. So the better consumer sentiment you would think would push yields a bit higher. The obviously dropping in inflation should push yields a bit lower, but really they just didn't move.
Yeah, kind of a push there. Thank you, Rick Santelli, on the data. We add that to the jobs numbers that we got today. And I think the feeling on Wall Street, just talking to some traders and investors about it, is maybe the market got a little too excited about those rate cuts, starting to price in, what, a 50% chance in March. That goes lower. The March rate hike
What a
expectations
rip.
after today's number. Why? Because they were pretty decent numbers. I mean, 199,000 jobs added in the month. That was better than expected. There were revisions lower by 35,000. Wasn't too bad.
A pullback is coming. Bullish as long as it's above. That's true.
Month data, 0.4% increase on the month in wages. Excuse me. But that comes off of a 0.2% gain the prior month, so that could be why the big jump. And if you look at the yearly number, 4% rise in wages from a year ago, that pretty much held steady with trend. So you don't have to get too excited about the higher wage numbers. But all in all, look, we got a better labor force participation. That rate ticked up. It's especially notable that we got lower unemployment in the face of higher labor force participation. All of these things point to a consumer and an economy that's not in recession. And I know you can say that unemployment lags. Jobs
Unemployment
lagging.
lags,
It's,
Sarah.
it's a lagging indicator for
does.
sure. And also, we had some snapback in jobs, especially manufacturing, as a
Oh,
result of
and
the
Q.
UAW strike
Strikes
being off.
ending. Right.
So that helped. However,
Come
the
on.
underlying picture here is not one of a very
And
stressed
Q
out
breaking
labor
over
market,
yesterday's
especially
highs.
525 basis points of tightening and all this excess savings running out and sentiment at the corporate and consumer level being kind of weak. It's not bad.
No. Next week, PPI, CPI?
PPI, CPI, Fed meeting.
Fed meeting.
So the CPI will be important, obviously, but we won't get a reaction.
Isn't it?
For sure, because the Fed wants lower inflation. You know, it's great to have a good jobs environment and labor market as long as inflation's coming down. And that would be the worry that, you know, as long as we continue to have strength in the economy.
December markets are crap.
inflation might be harder to
So
fight
far,
down
not
now
really. I
with
mean,
this
look at
last
these
leg.
moves.
I think of Jeffrey Solomon.
Shit's on crack.
He was on yesterday, and he's the only one that comes here and says the Fed should just raise rates again and just squash this thing and make it clear they want to get rid of inflation, one and done, because there's still some evidence of a strong economy, and I think he would point to today's labor market as an example of that. They won't do that. They've made it pretty clear they want to pause right now, but is the market's expectation a little too giddy around rate cuts coming sooner rather than later next year? That's, I think, the question. And that's why the tone of Chair Powell next week will be so important on those cuts and on how he's thinking about changing policy. This is not a number that screams we need to go from hiking to cutting.
We get CPI, PPI prior to the Fed.
Correct. We get CPI prior to the Fed.
So we're going to get some commentary, at least from them, to incorporate that.
Right, and the expectation is that we'll continue to see, you know,
Decline.
inflation higher than target inflation, you know, but
Every year.
trend is coming down,
Yeah.
and that should be. Look, we got some consumer earnings to talk about. You know, I always look for the consumer, what's happening. I thought the caution out of Lulu was interesting, given their numbers have been so strong.
Yes, it has.
Especially around even holiday spending so far on Thanksgiving and Cyber Monday. Here's what the CFO is saying about the outlook.
Coming off of a strong Q3 performance, we did experience some very strong performance during our Cyber 5 period. We are mindful of the macroeconomic environment as we move into the balance of Q4 and still with 2/3 of the quarter in front of us, you know, being mindful of the pressures out there and contemplating that and how we are guiding. We are also planning business for multiple scenarios to be able to capitalize on any, you know, potential upside.
They're being cautious. They're being conservative.
Stocks turned around, by the way.
Because all the analysts are saying there's really no evidence of weakness there, and they're probably just being conservative and going to be expectations, because when it comes to things like margins, they've held the line on full price items and not gone into promotions, and they're still seeing sort of double-digit growth and high innovation. So there's not much in there, at least that the street doesn't like. We're going to talk to an analyst about that, but I think it just gives you a sense of how everybody is proceeding cautiously, because nobody quite knows what's going to happen. And just one more data point to mention, U.S. household net worth. We got some numbers that got buried last night about that. In the third quarter, they dropped by the most in a year. Why? The stock market had a rough quarter, and so that was really, it was the equity holdings. Home values stayed very strong, but household net worth decreased by $1.3 trillion, 0.9%. So it's just a trend and another data point to feed into when we're wondering what kind of shape the consumer's in.
All right, let's dig deeper into the market reaction to today's jobs data.
Yo, come on.
Subjects as well. Our next guest says there's no room for error in the current market valuations, and investors should consider the realities of an economy under stress. Joining us now is Morgan Stanley Wealth Management Chief Investment Officer Lisa Chalet. Lisa, why do you feel that way? Let's just start there.
You know, look, I mean, this continues to be a market that
The 52-week high is 46.07, so might have to kill this here.
which is where we were when 10-year real rates were sub 1%. The 10-year real rate today is 2%. And in the long run, you know, valuations tend to follow real rates. And I think one of the things that has decoupled here in the current environment is financial conditions have not been following real interest rates since the middle of the year. And this has been the conundrum for the Fed. They have kind of lost control a little bit of actual tightening. And the fact is that the liquidity environment for this economy remains as accommodative, quite frankly, as it's been, for over a year. Yes, we've had moments of tightening of financial conditions from July 31st to October 31st. But as we know from the month of November, that has proved extraordinarily short-lived. Why? Because we've had this wild and unpredicted fall in oil prices, now 27%. I think that's one of the underpinnings of this sudden shift in consumer sentiment and inflation expectations. And we've had oil prices decouple from the dollar, right? And so all of these things have loosened financial conditions. And while the Fed wants to be tight and wants to, quote unquote, stay on hold, I just don't see any way that they can move towards cutting with financial conditions where they are.
Interesting. Lisa, on the valuation front, there are those who would point to the 7 stocks that represent, 29, 30% of the market cap. Now, some of them have lower, not particularly high multiples, but a couple have fairly high multiples. When you look at the other 400.
All right, so minus 250. I'll take the small loss.
What do you make of that bifurcation? Is there a case to be made for going after perhaps some of the lower multiple and or the broader market that doesn't include the big 7?
Yeah, 100%, David. I think that has certainly been our perspective all year. We've been recommending more of a blend between the market cap weighted index and the S&P 500 equal weighted index for passive investors, and a more active approach for those who want to stock pick. Because to your point, those other 493 names are selling at a much more reasonable and coherent and analytically grounded multiple of, somewhere between 16 and 17 times forward. And that does make sense to us. And so the concentration that we're seeing in Magnificent Seven was last seen kind of back in 1998. We know that this type of concentration tends not to be permanent, and ultimately it gets undermined. And our best guess is that if in fact the Fed does begin to cut rates at some point, it's not going to be these defensive, secular growth Teflon names that are going to lead the market. It's going to be more value-oriented, cyclical type companies that have deeply sold off. So financials, industrials, some of the discretionary spaces, some of the small and mid cap spaces are where we're searching for value in anticipation of that ultimate shift and rebalancing in leadership.
I guess, Lisa, just
Still
on the
pushing.
on
Glad I took the small loss.
Even if you don't think the Fed is going to start cutting earlier in the year, first half, or anything like that, isn't the data telling you that maybe they don't need to, and the economy is just going to be fine? After an employment report like this, consumer confidence improves on the back of lower gas prices, and so do inflation expectations, by the way. I mean, isn't that a good environment for earnings and for stocks if the economy can hold up, which is ultimately more important than whether the Fed cuts or not?
To a certain extent, depending on the shape of the economy next year, we may get a validation of this soft landing. But if we get a validation of the soft landing and the economy is strong, it makes putting a 19 times forward multiple on the market very, very hard. Because what it says is we're not at trough earnings anymore. We're going at mid-cycle earnings, moving towards a reacceleration.
Just gonna wait and see if can top tick this.
Multiples cycle, right? Price earnings valuation multiples cycle in the inverse to earnings. And so if earnings are reaccelerating, your multiples are probably compressing. And so, one of the points we've made to investors is we may be in this seesaw kind of trade-off where, the better earnings are, the lower multiple investors are willing to put on those.
Lisa, we're going to leave it there, but appreciate it. Thank you.
Absolutely.
As we head to break, here's our roadmap for the rest of the hour. Lululemon shares have rebounded from earlier losses. We're going to talk to one analyst who called the stock a buy. He has one of the highest targets, in fact.
New highs.
Most retail traders seem to be jumping back into the market, at least at levels that we haven't seen for over a year, where their money is going, what it may mean for trading into year end.
And is New York's wealth migration a myth? New data you need to see. Big show still ahead. We're continuing to climb here for stocks. Dow's up 120 points.
Goodness. New highs, new 52-week highs on ES. 1 year daily. Well, I guess not. We might get a little retracement for the London close, but outside of that, jeez Louise. Ugh.
%50 off.
Lulu shares bouncing back from lows with a beat on the top and bottom line, but the athleisure company warning of a weaker holiday outlook. John Kernan, TD Cowen, retail and consumer brand analyst, joins us now, has a buy rating on Lulu. It's a little confusing, John, because the numbers were strong during the quarter. They beat and they raised. So what's with the outlook?
Yeah, happy Friday, Sarah and David. Thanks for having me. I think the outlook's conservative. I think they've proved that over multi-years that they guide fourth quarter revenue conservative. They tend to come out and beat that when they issue a press release for their update around ICR. So we expect them to raise revenue and EPS guidance as early as January 8th when they reported ICR.
We were just talking about the promotional environment. Clearly, fourth quarter always has that. How much has Lulu been able to hold the line? I noticed the margins look good, but what happens now in the coming weeks for pricing?
The margins are phenomenal. Their Q3 gross margin was up 220 basis points year over year to 58%. That's the highest Q3 gross margin in the company's history. They are holding the line on pricing and promotions, whereas the peers and competitors are being more promotional. So we think there's more gross margin upside next year.
I'm gonna try a short here at 46.08.
Inventory dollars are down. Sorry, there. Inventory dollars are down year over year for the first time in a long time. They're going to be a very healthy full price sell through. environment. They have more innovation coming. And we think margins in their international business can move higher, particularly China, which was up 52% year-over-year last quarter.
I guess then the question for a bull like you, John, is what is the right valuation? What is the premium valuation that Lulu deserves, given obviously
Crazy amount of buying and selling.
growth that is decelerating from where it has been?
It's decelerating, but it's in line with their Power 3x2 strategy. I think they've managed expectations around that phenomenally. Our price target's 36 times. Next year's earnings were pretty significantly above consensus in terms of where we think margins and top lines play out for next year. If you look at where the stock is right now, it's trading at a 5-turn discount to its historical valuation. It's cheap. It's returning relative to history. Its return on invested capital is hitting all-time highs. The financial model is still inflecting despite the fact that domestic business has decelerated a bit.
It's cheap at 38 times earnings?
Versus own history is. And,
but does it have that same kind of growth ahead of them?
A lot of growth ahead of them. High teens EPS CAGR, one of the highest return on capital businesses in consumer discretionary. We think there's a lot of room for upside here.
All right, John. Thanks for joining us with your take. Appreciate it. Perhaps one reason we saw the turnaround, all that positive sentiment. John Kernan from Cowen. David.
Thank you, Sarah. As we head to break, check out the biggest gainers in the S&P this morning. It's led by Paramount. I might need to make a phone call to. It's on this deadline story, sort of positing the idea that Redbird might be interested in a control position owned by National Amusements.
Are you poo-pooing it?
I'm not yet, because I haven't been able to make calls. I'm going to do one right now, see if I got anything. Squawk
None of your
Street will
job.
be right back after this.
Okay. Crazy, crazy. Mm-mm. Mm. There we go. Think we're gonna end up coming for that gap.
Trades such as
Let's go.
ETF, Bitcoin, Coinbase. So a number of names moving right now that seem to be doing so as a result of a lot more interest from retail investors in the market. In fact, we haven't seen this much interest in over a year. Kate Rooney's been sort of following the money. Kate, there's kind of a meme-ish feel to a little bit of what's been going on again. What's your take?
Yeah, fair to say, meme-ish feel. That sums it up nicely. December, David, it's typically a slow month.
Let's see if we can get a retest based on where I'm seeing the gap on the forex side. We're looking at about we're looking at about a 20-point pullback. 20, so
is money flowing out of money market funds. So those are seen often as a proxy for cash and way to play higher yields, and those funds and ETFs have seen record inflows this year. As rates climb, but for the first time since May, flows to money market funds. And those ETFs fell into negative territory. That's according to Vanda Research. Vanda says it's seen traders instead move actually out of some of the big tech defensive names and then into some of the riskier, smaller cap software names in the Russell 2000. That includes some of the crypto proxy stocks we've talked about. JP Morgan also noted an uptick in GameStop inflows this week, the original meme stock and often the poster child for risk taking. There has been more buying in Tesla as well. That's the most widely held stock by individual investors, about 12% weight in the average portfolio. Again, according to Vanda there, analysts say if retail flows maintain this trajectory that they're on, they could support Tesla's stock price and embolden retail traders to take on even more risk thanks to what they call portfolio wealth effects around Tesla. Back to you guys.
You know, Kate, I said meme-ish. Is there any sense
sorry,
that there
where
sort of
is
that
the
focus on
gap
heavily shorted stocks as well again?
on which forex chart? So I'm looking at my MT4 on FTMO, and the gap is between 45.83 and 45.86. So the 30-minute candle just popped up to 45.86, and usually when I've seen this, price ends up coming back to fill that gap. And it also created one on US 30, which is the Dow Jones, and it also created one on US 100, which is the Nasdaq. So I'm just going to be waiting and watching for tops to short.
Meme stocks, risk taking, and crypto investors are back.
Hey, Rooney, Kate, thank you. Still to come, Goldman Sachs chief economist Jan Hatzius joins us. Of course, it is Jobs Day. He's going to break down the numbers and weigh in on what it means for the Fed's next meeting and beyond. We're back after this.
MT4, yeah. So depending on the broker, like different brokers, well, different firms use different forex brokerages. So some of them you might not be able to see. Is there a way to see the forex? No, like it's a different broker. So the one that I just mentioned that I'm seeing the gap on is I'm seeing it on forex brokerages like FTMO and True Forex Funds. On True Forex Funds, I'm also seeing the same gap all across. MT4 is a platform. It's MT4 and MT5. They're platforms like Thinkorswim, Tradeovate, NinjaTrader. You're welcome. There we go. There we go. Mm-hmm. Let's get paid for our troubles. Okay, nice pullback. There we go. Nice pullback. I was debating taking the 06s, but I'm gonna wait a bit. Let's see if we get another lower high.
Has agreed to open a new, larger border crossing into Gaza. A senior U.S. official said the opening was agreed to on the request of the U.S. The Kerem Shalom border crossing will be open for screening and inspections of humanitarian aid. The Supreme Court is scheduled to consider today whether to hear cases that could determine the legality of the abortion pill. The Biden administration is defending the pill's federal approval and is advocating to keep it available by mail. If the justices decide not to take up the appeals, a lower court's ruling would go into effect, restricting availability of that drug. Russian media reports today that President Vladimir Putin announced his candidacy in the presidential election next March. Putin is expected to face only token opposition and is all but certain to extend his rule until 2030. Yeah, Sarah, I've got a feeling that there's just not much doubt in the outcome of that election.
No, least surprising news ever. Thank you, Bertha. Bertha Gooms. The November employment report showing a gain of 199,000 jobs last month. That was slightly more than expected. Unemployment rate drops to 3.7%. Average hourly earnings slightly higher than expected.
30 minutes left, guys. Ladies and gentlemen.
He joins us at Post 9. Nice to see you, as always.
See you as well.
We're fading. We're fading.
So the market now is liking this number because good jobs growth. Wages a little bit firmer, but nothing, I think, too hot. What's your take?
Overall, I think it's a very friendly report, and it, I think, takes away any concerns that the household survey is weakening. It had been running weaker than the establishment survey, so the unemployment rate had been drifting up in recent months, and some of that was reversed. I think that's reassuring. Payroll growth is firm, but gradually decelerating towards the trend pace. And I think the increase in average hourly earnings helps on the income side.
There you go. Look at that. Sorry to bug you, but just trying to understand. Okay. Okay. Confused. I heard gap was on Dow Jones,
Are you sure
but
about that? Because that's the one that the Fed is going to be most
not
interested in.
currency.
Relative to some of the strength
All
of the
right.
labor market, right? It's
Forex brokerages, not every Forex brokerage allows you to trade. They don't, not everyone allows you to trade the futures, right? Which is Dow Jones, ES, Nasdaq, Russell, the Nikkei. So the Forex representation of these instruments are a different symbol. You ask any Forex trader what US 30 is, they'll know you're talking about the Dow Jones. Now, they may not know it's the Dow Jones futures because everything on the US 30, NAS or US 100 or NDX 100, those are derived from the actual futures that's provided by the CME group in Chicago, right? So I trade on various platforms. I trade on MT4, I trade on MT5. So me seeing that, okay, oh damn, this created a gap here, I see that, okay, price is going to end up coming back down to fill that. And the reason I say that is because I've been doing this for going on 11 years, and I've seen times where news came out and you don't see the gap on Thinkorswim, but I see the gap on a Forex brokerage. And when I see that, it's like, oh shit, okay, this is going to come down to fill it. And look at it. Here it comes. It's already into the gap. Look at that. Look at it slide. Look at it slide. Look at that. Look at that. You see this? You see this? Beautiful. Here it comes. Here it comes. Here it comes. Look at that. Look at that. Beautiful. 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 Oh, well, guess I ain't getting this. There we go. Come on.
PCE numbers, which is the index that the Fed is most focused on, because there are quite a lot of
sort of differences between PCE and
Keep on
CPI.
fading, baby.
This number
Keep
goes
on
look a little bit
fading.
on a
Beautiful. Right? So again, yeah, I've been doing this for a while, so I've seen a lot of different things and I've taken mental notes of a lot of different things. So when I see it, it's like, okay, this is what's gonna happen.
And I think it was a 7 trillion addition overall to global GDP, a 1.5% percentage point increase over a 10-year period in productivity. Are you guys still there? Are you updating any of the numbers given all the advances that have taken place?
No, we're still there. I mean, there's obviously a lot of news, but it's still
Keep it going. Keep it going. Keep it going. Look at this. Beautiful.
there is a lot of low and mid-level administrative programming, research support work
Let's
in the
go.
economy that will be replaced by AI over time. Not next year or in the next couple of years, but on a, say,
Come on.
10-year horizon. And that can really boost productivity growth over the longer term. So
productivity gains
Beautiful. Look at that. Look at that. Look at that. Woo.
not in the near term. We have not made any changes to our near-term productivity forecasts. We're still thinking about 1.5% in the next couple of years. But then if you go out a decade, we did actually lift our longer-term potential GDP growth forecast by 0.4 of a percentage point, which is a reasonably sizable amount, even though we adjusted for some of the offsets. If you invest more in AI,
Woulda, coulda, shoulda, but you didn't.
firms are going to
Beautiful. Beautiful.
less
Oh.
than other types of
Wick to the top, wick to the bottom. We're gonna go lower. If we can get and close below, as long as we stay above yesterday's high, we're good.
Consumer. Actually, some of the warnings we're getting from some of the retailers. Jobs are in good shape, so that bodes well for the consumer. But excess savings are running low. I mentioned the household net worth numbers, which came down a lot in the third quarter. Can the consumer avoid a recession next year
No,
if jobs continue
no,
to remain
because
high
look
and
it,
tight?
they took out they took out longs, they took out shorts, and now we're gonna go down. I've seen this before as well too. The same exact pattern.
Jobs are still growing at a decent though slowing pace. Wages are still growing at a decent though slowing pace, and inflation is down a lot. So at this
Damn,
point,
look at
real
SPY.
wages are growing. A year ago, real wages were falling despite 5.5 or 5.75%.
Back up? Nah, I don't think so.
If you put all those pieces together, then
I mean, if it does, I would love it, because then I'd be able to add to
close to 3%
my entry.
after something like 4%
But
this year.
overall,
And that is more important than excess savings. Excess savings were crucial in 2022 when you had a big decline in real income. But now excess savings in some sense are a little bit more of a nice to have. What's really helping consumer spending grow is the increase in
So you think they can do it? They can
Yes.
pull this whole thing off without a
2%.
recession.
2% or so for real consumer spending growth next year is our expectation.
Jan, thank you very much. It's good to talk to you, especially on Jobs Day. Jan Hatzius, Chief Economist at Goldman. Still ahead, a look at New York's so-called wealth migration and some new
holla,
numbers
holla.
that
I
show
know,
that
Queen, I know you are short, right? Tell me, you short?
steam. S&P goes to the flat line.
Damn. Ah, I missed it. Should have taken it. Good. Oh, good, oh, good, oh, good. $20 till London closes. Just short. Alright, alright. Where you short, my guy? Come on, baby. Good short, queen. That's what's up. Mm-mm-mm-mm. Come on. Beautiful. Ooh. Almost 100-point pullback on NQ.
Welcome back to Stock on the Street. Carl joins us now live from Goldman Sachs HQ. He's migrated over there. Carl, what do you have ahead?
Sarah, pretty nice treat in the world of live television. It's only happened a handful of times. We're live on the trading floor, Goldman Sachs headquarters in Lower Manhattan, where later this morning we're going to talk to Ashok Veridon, the co-head of Global Banking and Markets, about everything on our plate today. Very rare interview.
We found support here on NQ. Nah, it still has the gap to fill. NQ has not yet filled the gap. So based on my calculations, where it's at right now, it's still about 55 points away from filling that gap.
It's going to be a great conversation coming up your way at the top of the hour, just after.
Thanks, Carl. Despite multiple
So maybe a little retracement for the London close and then continuation.
Wealth, perhaps at best, has been greatly exaggerated. Robert Frank is here with some numbers that I guess, was it a myth that the wealthy were the ones really departing?
It depends on how you like to see these numbers. This new report from the Fiscal Policy Center saying the wealth flight from New York during COVID was in fact temporary. The report said New York lost about 430,000 residents between 2020 and 2022. Nearly a third of them were making more than $172,000 a year. But by the end of 2022, the out-migration rates for those top earners actually returned to pre-pandemic
Yes, shorts are in play.
2,400 millionaire earners moved out, yet the state created over 17,000 new millionaires. That means that the overall millionaire population during the pandemic grew despite that 2021 tax hike in New York State. Quote, not only is high earner tax migration largely a myth, the report said, but there is no need to fear for the state's fiscal and economic future. State Controller Tom DiNapoli issuing a contrasting report saying out-migration still exceeds those pre-pandemic levels. He said, given the importance of high earners in New York State, quote, policymakers need to make sure the state remains an attractive, affordable place to work and live. This debate will only intensify as New York faces a $4 billion budget deficit next year. Legislators are urging the governor to raise taxes on high earners. That's why this is really becoming important as to what effect higher taxes have on the high earners and the tax base.
4 billion state or 4 billion city? Because the city also is going to be facing it.
The city is facing one.
Immigrant crisis and housing.
That's right, and it's all part and parcel because the city takes a lot from the state. They're asking the federal government for money, but a lot of this is also about spending. If you look at spending today versus pre-pandemic, it's about 30% higher on a statewide basis. The budget was $175 billion in 2019. Now it's $230 billion.
And add in New York City's budget of well over $100 billion.
That's right.
And you are, I mean, we're equal to Florida, the city of New York.
That's right.
So
in terms of budget,
they've got 19, 20 million people in Florida.
And remember, the combined city and state tax rate and federal for someone who lives in New York is about 52% right now. 52%.
I don't need to be reminded of that, but thank you, Robert.
So the question for legislators and Governor Hochul saying, look, we just don't have room to go much higher once you look at a combined rate of 14% state and city.
Speaking of bad numbers, did you see the California deficit was released today? $68 billion. That was a record for California, and I think also hints at the exodus from that state.
Yeah, and the question that states will have, all these high tax states, now that they're just not getting revenue from the federal government, and we're not seeing the big capital gains increases we had in 2021, do you cut services, which they're trying to do in New York with a lot of pushback, or do you increase taxes? And there's just not a lot of room on either side politically, from the progressives to cut spending, or from the more moderates to raise taxes. So this is going to play out next. This will be the big story on the state fiscal level as to what these states do.
Meanwhile, New York State did have an exodus of people. There's no doubt.
No question.
Now, it may have been people who are actually just dealing with higher prices who chose to go to places that it is simply less expensive to live.
And it's not mutually exclusive that some people left for affordability reasons and other people left because of taxes. This report seems to suggest, well, most people left for affordability reasons, therefore we shouldn't worry about taxes. In fact, both could be true. And the fact is, migration is still higher today, especially for that top 20% of earners. In fact, it's
I'm gonna wait till London close or later this afternoon to see if I'll. I'm definitely most likely gonna reshort again.
We know really rich people who live in Florida. And a lot of that is obviously also for the end of life stuff.
But it doesn't take that many of them.
I'll be looking to short for that gap fill because like I'm literally seeing it all across.
That many to really start affecting revenues.
There goes gold.
Thank you guys.
Robert Frank. Still to come, another strong jobs report this morning. Unemployment rate falling to 3.7%. National Urban League's Mark Morial joins us with his take on the numbers and why he sees a soft landing ahead. Stay with us.
So if y'all got any questions, man, feel free to ask. Ooh, nice pop. Let's see. What is we gonna get?
Let's get back to the final jobs number of the year. Unemployment rate is 3.7%. That's a 4-month low. Our next guest predicts a soft landing ahead. He is Mark Morial, National Urban League President and CEO, former New Orleans mayor. Mark, good to have you. I guess let's say, I'm curious about your soft landing prediction and what you're basing that on.
So this is important to recall. There have been many commentators predicting a recession
recession in the last 20 years.
Excuse me.
It has not come to pass. When you have consistent job growth in the manner in which we've seen a continuation of a decline.
8 minutes till the London close, and here's our little pop.
It points to a year, 2024, where we could have even a stronger economy. So I don't see signals that point to a recession. I see signals which point to the continuation of job growth. Now, the Fed, as I believe they should put the brakes on interest rate increases and really begin to consider.
You got to be trading the new contracts, right?
Then 2024 can be a strong year for the American people. It's a continuation of the comeback of the economy after the post-COVID recession. I think engineered by the president's policies and the Federal Reserve's efforts to kind of navigate between inflation and the necessity to.
You're trading the new contracts. Nice. Look at that. Right back up. Let's see.
What could stop that? An international crisis and a conflagration of what we see in the Middle East could have an effect. But that's beyond, if you will, what is happening here on the public policy front when it comes to the economy.
Mark, I wanted to ask you about your role at the National Urban League. You have dedicated yourself to fighting for economic equality, and we've talked to you a lot about this over recent years. Just given what we're going through, the testimony that we heard from the presidents of Harvard and MIT and Penn, which I believe is your alma mater.
Wow.
What do you make of some of those comments? And
nice bounce for the London close. Let's see what we get.
So I did not see the testimony before Congress, but let me say very forcefully, I believe in the right of all students to free speech, to free protest. But free speech is not hate speech. There's a distinction between the two. I abhor and condemn anti-Semitism, as I abhor and condemn anti-Black racism, Islamophobia, and the like. And I think we must create climates on college campuses that say to students that you do have the right to free speech, but there's a line to be drawn. And condemnation of people based on race, religion, ethnic origin, sexual orientation is inconsistent with the responsibility that goes along with the exercise of free speech. That is what we believe. That is what we long believe. And can we, in this generation, balance the two? Is what we see being tested on college campuses today.
It seems like a simple and basic sort of idea, but if you watch the testimony, you would have seen none of the three presidents were able to
nice little pull.
characterize calling for genocide against Jewish people as harassment or outright condemn it. They said it depends on the context. And I do wonder, Mark, given
I'm
your
tempted
experience
to
with
try
DEI
it
departments,
here.
if you think that something has gone a little rotten within some of these DEI programs at campuses, potentially in corporations as well, where they're focused and whether they really are all inclusive when it comes to protecting diversity, equity, and inclusion.
Facts. Would have loved to.
I think that type of argument
Would
is
love the
inversion.
gap fill. We
I think
bounced right off the start.
Programs that have at their core the necessity to include all people. What has created this is Trumpism.
Let's see how
What has created this
high we
is
pop.
the type of actions you saw on January 6th. And in Charlottesville, the notion that harsh rhetoric and violent threats, that is what creates the environment we have, not the idea of diversity, equity, and inclusion. That is an effort to place the tail on a donkey.
Then why can't these DEI departments protect Jewish students on campuses right now and make them feel safe?
The responsibility to protect Jewish students is not on the DEI departments. It's on the board of trustees. It's on the executives of universities. It's on the presidents of universities. Not on the DEI.
Yeah, so seems I'll be waiting for this afternoon. Let's see. So definitely keep watching and see if we can get some lower highs
I think it's important for college presidents to say
on a 15 or 5-minute time frame. That'll be a really good sign.
and we're going to make sure that our universities University is a state for free speech, but that free speech is not hate speech.
Mark, appreciate your taking time with us this morning. Thank you.
Thank you. I appreciate it.
Mark Morial from the National Urban League. Before we wrap up here, Sarah, again, I just come back to movements in the market, particularly sort of a sector I've focused on for so long. Paramount, Warner Brothers Discovery, both up on this rumored story and deadline about Paramount in particular and National Amusements and the control position they have there, and whether or not somebody might be able to buy that. Of course, if you were to actually follow
3
that
minutes
scenario,
left.
that's logical conclusion.
Well, ladies and gentlemen, happy Friday. Thank you for joining. Ending so far red on the day for me. Not bad, small little loss. But enjoy the weekend, be safe, and I'll see you guys Monday morning, bright and early.
I mean, I think next year you have to consider consolidation, broadly speaking, amongst some of these companies.